Hello. If you can hear me, please just chat and say I can hear you so we can start. Hello. 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 Are you guys online? Okay, let's wait for others. Let's wait for others. I can see no one person online. We have just two persons online. I'm waiting for others to join. Please, if you're online, just type active. Just type active if you're online. Type active. Okay, so let's start. We have just four persons online. So I was having issue with my network, but I'm set now. So I believe we can continue while we wait for others. Okay. Let's proceed. Let's proceed. Let's proceed. Let's proceed. Good morning, everybody. So, as usual, I will be very slow. I won't be fast because this innovative and a very dedicated part. Today, we'll be discussing about market structure. Our today's topic will be market structure. Market structure. Okay, before we start, let's just do a little review on what we talked about on Tuesday. So let's do a little review on what we talk about on Tuesday. So guys, so on Tuesday we talked about cryptocurrency. On Tuesday, we talked about the introduction of cryptocurrency, how it started. Talk- We talked about the introduction of cryptocurrency, how it started, and we made mention of the types of cryptocurrencies. Bitcoin is one of the major and the first cryptocurrencies that existed, and we talked about when the year it was existed, it was created, the year 2009 by the founder called Satoshi Nakamoto. Also, we talked about how many bitcoins are in circulations, 23 million bitcoins in circulations, and we've used about 21 million plus, 21.9 million, 1.9 million are not yet mined. And also, we talked about that if after the 21 million, 23 million BTC are mined and circulation, there will be no new BTC created. There will be no more Bitcoin created. That we're going to work with 21, 23 million BTC. Also, we talked about the various types of cryptocurrencies, of which I made you guys understand that Bitcoin is too big to be added as part of other cryptocurrencies. Bitcoin on itself is separate cryptocurrencies. You can't compare Bitcoin with any other cryptocurrencies in terms of volume, in terms of the size, in terms of circulations, and the rest. In fact, Bitcoin moves the market. Bitcoin controls the market. When there's a big if Bitcoin moves in crypto, we have two things that pushes the market. One that moves the market. One, fundamental and technical analysis. Fundamental analysis is about news, while technical analysis is about the charts. Now, when there's a fundamental analysis, when there's a very major fundamental analysis, now what are the news? Some example of those fundamental analysis are something like, for example, someone like those powerful people, powerful men in the world. For example, let's use Donald Trump. If Donald Trump come outside and say, from now on, the USA, all states in the US will be using BTC as their means of payment. You see, just that word, just that sentence alone, trust me, immediately you see Bitcoin skyrocket. Immediately. And when Bitcoin is moving, you see all of that cryptocurrencies, all of that coin will follow. It's a dominant coin. So we talked about Bitcoin as one type of cryptocurrencies. Then we talked about the altcoin as another type of cryptocurrencies. And the altcoin consists of coins like the what's it called? The Ethereum, the Solana, BNB, Litecoin, those popular good projects that the altcoins. Then we talked about stable coins, stable coin like the USDT, USDC, BUSD. They are stable coins. Talked about meme coins. Meme coins, they are new coins, new projects that are still very, very volatile, that are not yet uh, what's it called, structured in the market. They are not, they don't really have that much prospect. They are still looking at them, that the meme coin. That those are example are the Shiba, Miro, Doge coins. Then we talked about shit coins. Yeah, shit coins. There are those coins that are new projects. They just produce them. Some are most of those shit coins are scam coins. They are coins that you don't even know if they are good coin, if they are good projects. They just launch them like a new project. They just launch them and you don't even know if they're going to do very well or if they are not going to do very well. So they are the shit coins. Most times you don't trade them. In fact, it's advisable not to trade them. But if you trade them and peradventure there's a good project among those coins, trust me, you will make it big time in life. I made example of Shiba. Said Shiba was a shit coin. 2020 when that Shiba came in, I locked in with Shiba and Shiba gave me huge amount of money. So that's what I'm saying. So if you are fortunate enough to get those shit coins that are good projects, trust me, within a few period of time you'll make good millions from it. But if you buy the wrong projects, you will just lose all your money without even getting it back forever. Some projects are just rocked pool. They call it rocked pool. When I mean rock pool means they have been removed from the database of cryptocurrencies. You cannot see that coin again. So many coins were rock pool. Then we talked about blockchain. I explained to you guys how blockchain is, how blockchain worked. I make you understand how blockchain is the same thing as bank. Blockchain is a public notebook where you can see, you can track and trace all transactions done in cryptocurrencies. Blockchain, and I explain how blockchain work. That this is the first transaction in a block form. Then the second transaction will come in and key in. That's why it's called blockchain. Something like this. So this is how chain is now. You know chain. So this is the first transaction, this is the second transaction, the third transaction, the fourth transaction, fifth, sixth, seventh, and so on and so forth. That's how all of them are chained. And they cannot be what? The database cannot be altered. That's why cryptocurrency is one of the most secured platform ever. The database cannot be changed and you can track all transactions. For example, if using bank as an example, if I send money from my bank to your bank and you're telling me that you have not received the money, there's nothing on this earth I can do. The only thing I can do is to do what? Is to confirm from my bank. My bank will only tell me that the money has left my account. The money has left their bank and has gone to your bank. Now, the bank has an intermediary. It has a me. It's called a what's it called? There's another what's it called? There's another body at the middle of your bank and my bank. So sometimes that body will just the money will be there pending. They've not approved it. But you see cryptocurrency, if you there's nobody, There's no middleman, no third party. It's just between my wallet and your wallet. If I send Bitcoin and it has left my account, that Bitcoin will not be reversed. That Bitcoin was what? So successful. So that's one major difference. Why cryptocurrency is better than banking. Then we talked about why cryptocurrency existed. Why did they even choose to bring it out? Now, for example, I made example that one, for easy transactions. For example, you are in Nigeria, you want to send money to someone in China. We don't have that currency. They don't use China naira there, and we don't use Chinese yen here. So the easiest way to send money is through what cryptocurrency. You send Bitcoin, it's accepted. They will just receive it and convert it in their own currency. That's one of the reasons. Then two, cryptocurrency, you cannot carry it. It's something you cannot see. It's something you cannot see. You can just log out from your account. You don't need any access from anybody to say, please, I want to log in. Please, are you online? Please contact my. No, you can just do it between yourself and that's all. So these are some of the topics we talked about on Tuesday. I just had to do a revision of them because of some persons here. They were not available on Tuesday. Oh, sorry, slides. Trying to use. For some persons that were not available on Tuesday. So today we will be talking about market structure, and our class will be for 1 hour, 30 minutes. 30 minutes is already gone, so we have 1 hour. But trust me, if I'm still much, we'll go beyond that. But we have 1 hour for this class. Introduction to market structure. Introduction to market structure. Market structure is the foundation of all price movements in financial markets. And sorry, mind you, whatever I'm teaching, whatever I'm teaching, especially market structure, and in fact, apart from those cryptocurrencies I talked about, traditional cryptocurrencies, whatever I'm teaching now, market structure, financial markets, not just to cryptocurrency, abides in the stock markets. You can use this knowledge in the stock markets. You can apply the same knowledge in the forex markets, indices, any financial markets. You can apply the same. All have the same what knowledge. You can apply the same knowledge there. So it's not just for cryptocurrency. You say, I was taught about market structure in crypto. There's nothing like market structure in cryptocurrencies. Are you getting me? Market structure is what? Market structure. So market structure is the foundation of all price movements in the financial markets. It explains how price moves, why it moves, and the direction it's likely to what to continue. Market structure. Market now this is not market will go and buy things. This is not market will go and buy provision and food stuff. The financial is also called markets. Financial markets. Cryptocurrencies explains how price moves. Before you trade as a trader, the first thing you need to understand is what the market. You come online in the morning, you ask yourself, what is the market structure? You identify the direction of the market. Is the market bullish or bearish? Are we in an uptrend or a downtrend? Those are the first questions you need to ask yourself. Then you open your charts and reading what start reading the market. As a trader, it helps you to know the current trend, because in trading it's not advisable to go against the trend. Trust going bullish. It's a bearish trend. You keep what looking for possible what means possible entry to enter the market for what a bullish what trend. It's not always advisable to go against the market structure or the market trend. We help you find entry and to help you reduce your risk. This market structure is about highs and lows. Highs and lows. Highs means it's going up. Lows means it's going down. Are you getting me? Now, there are three types of market structure, or there are three conditions in which market structure exists. And what are the conditions? We have the bullish. Bullish, what is the bearish? Bullish means uptrend. The market is an uptrend, means the market is going up. Bullish. Bearish means downtrend. Bearish means the market is going down. Then range, there's no constant destination. The market is going in what? In a zigzag form, going what? Sideways. It's just going like horizontal range. I get me. So I will be using chart. I will be using the chart to explain, so you can understand very well what I'm saying. Types of markets. Sorry, I'm live. I have a trade that just tapped my entry. I'm trading good live. So I'm trading good live. See, I have I have three pairs I'm trading live. See, currently I'm in profit in all three of them. I don't know if you can see it. Yeah, the first one is loss. So I'm currently trading live. I'm live trading. So I'm coming. Sorry, though I will extend the time. I will extend the time, but I just need to lock in on this trade. I need to lock in on this trade. Since I start trading gold, I just fall in love with gold. I love the movement of gold. I like the way gold moves. So I've been trading gold for the past 3 4 days now, and trust me, I've made some reasonable amount from gold. The pair is so nice, so sweet. Its direction is always what precise and very clear. So I just took the trade now, took the trade now, took the trade now, and currently on profits. Just took the trade now, currently on profits. If you can trade, you can just buy gold. SAUST. If you are using Mexi wallet, you can buy gold on the Mexi wallet. Okay, let me hold on. Sorry, let me share this signal on my Telegram channel. I have a Telegram channel. Let me share it now on my Telegram channel before they go verse. So let me say. So gold is on the what it called? Is on a Messi wallet. You can trade with your Stop loss is 4587. Long good now. I'm saying my Telegram channel. Long gold now. Market entry. Long gold. SAUT USDT. Market entry. Leverage 100. Margin 10%. Stop loss 4 5 8 7 5 8 7. TP 4610. 4606. Good luck. So I've sent the signal on my Telegram channel. Long good. I was saying by the end of the class I will. So back to our training. So I will be explaining about the bullish on the chart. So let me go back to the chart. So I'm trying to connect you guys to the chat. You can see what I'm doing live. I want to explain bullish and but it's not just going. Please just hold on, please. I'm with you guys. Trying to connect. So I will show you live chats how bullish and bearish and ranging. Please hold on. Come on, maybe I'll have to reset my laptop. I will continue on my phone now. Okay. Ooh, did you guys take the gold? I'm making bastard money from it. Sorry, it's not bastard money. It just change. Okay, let me share my screen. Let me share my screen. Sorry, share my screen. Hello, are you seeing my screen? Hello, are you seeing my screen? Are you seeing my screen? Please reply. Are you seeing my screen? Just hold on, I'm coming. No, no, no. The funny thing is, I'm not even seeing what's happening. Are you seeing my screen? Are you seeing the live chat? Share screen. Let's see, where is it? Okay, now I can see the chat now. So okay, let's go. Yeah, sorry. I'm with you guys now. Sorry. Okay. So guys, I'm sorry for the break on and off, on and off. So let's go now. We are active now. We are active now. We are active. We are active. We are active. So, like I said the market moves in three ways. Please just pay attention. We are much active now. I can see that the chart is working, everything is working fine now. So, one, the bullish, the bearish, and what? And the range. So, these are the three ways market moves. So, first of all, we'll be talking about the what do you call we're talking about the bearish, the bullish. So, what is bullish market structure? What is bullish market structure? So what is bullish structure? Now, this is how price move. Price move this way. From this point, from this point to this point, then price will come down. Price will do a break of structure. I will explain to you guys what is break of structure. Price will do a break of structure to the upside. Price will come down again. You can see. So this is the bullish, or also known as what and as the uptrend. So this is the bullish structure or the uptrend what structure. Then the second one is the what is the bearish structure. Now the bearish structure. The bearish structure is the opposite of the bullish. Now this is the bearish structure. Price start from up, price come down, goes up, come down, goes up, and come down. Now note, it's not always clean like this. It's not always clean. You can't always see it very clean that you just move on a straight line. No, price moves in a zigzag way. You see it like it will just start giving you different kind of moves, different kind of structure that you won't even understand. You have to check your time frame, a different time frame for you to what understand the correct structure. This is the what this is bearish. Then we have the range. The last one is the what is the range. The range. Now this is how price move in range. Now in range, you don't know if it's bullish or bearish. It has no what, no significant what direction. It's just moving what sideways. It's going up, it's going down, it's ranging, consolidating. It's also known as the word consolidation what zone. You don't know. Most times the market use this for what manipulation. Most times when the market want to manipulate its way, the market will be moving in a range. In a range. Then the next thing you will see, because now the market is trying to what? Is trying to work on your psychology. The market will not just tell you that I'm going up or I'm going down. No, the market will be moving in range. Then before you know, you just see a long wick. Let me show you. You see the market moving in this direction. Then the next thing you see, you just see A long wick to the upside. Now, this long wick is known as what? Manipulation wick. Now, this wick does not mean, this one now, you say, everyone will now say, wow, the market is going up. Oh, BTC is pumping, BTC is pumping. You see people buying, buying, buying. You know what happened? In a split seconds, it will come down. Yes, it will come down. When it comes down, you see people say, oh, it has come down, BTC is going down. Now, BTC will go down now. BTC will go down. In fact, no, I don't want to spoil the diagram, but that's just how it plays. But this is the range. The range is what does not what give you a particular what direction. It's going what up and what and down. It do not you won't even know if it's bearish or it's bullish. You just see the market going up and going down. That's what for the range. Now this point is called in the bullish market structure. In the bullish market structure, this point is called a high. In the bullish market structure, that point is called what? A high. Are you guys seeing what I'm doing? Yes, you're seeing it. So this point is called a what? A high. H is known as what? As a high. High, which means what? The height. That's the height price has what has reached. Then after going up to this other zone, here is known as what? The higher high, which is called what? HH. HH. Higher high. Means price has what? Giving you a new higher high. Then you see price will what? Price will retrace down, which is also called what? A pullback. This is called a pullback. Now this pullback is known as what? As a higher low. Higher low. Now, why is it called higher low? It's called higher low because it's higher, it's lower than the previous what? Higher high. That's the reason why it's called higher low, because it's lower, it's higher, lower than the previous what? Higher high. That's why it's called what? A higher low. Then, as you can see, the next one here will be called what? A what? A higher high. Then this will be called what? This other zone will call what? A higher low. Then the next one will be called what? A higher high. So this is how we what? This is how we label it. This is how we label it. Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high, higher low. And so on and so forth. That's how we what? That's how we name it. Are you getting me? So this for what? This for the bullish what? Market structure. Now for the bearish market structure. For the bearish market structure, the first one starts with what? A low, which is what? L. A low, which is what? L. So then the next one will be what? A lower what? The next one will be what? Okay, sorry, I thought this is a communication class. Sorry. The next one will be what? A lower low. LL. A lower low. Then after lower low, you get to what? Because this one now is lower. Lower low means what? It's lower than the previous what? Low. That's why it's called lower low. Lower than its previous low. Then the next one is called what? A lower what? High. Now, because it's what? It's higher than the previous low. That's why it's called what? A lower high. Then the next one will be called what? A lower low. Higher than the previous what? Low. Lower than the previous low. This one will be called a what? A lower high. Higher than the previous low. And the next one is called what? A lower low. Lower than its previous what? Low. So this is how what we label the what? The bearish what? Structure. I hope you guys are following. I hope you're understanding what I'm teaching. Now, for the range For the range, now the range is a bit complex because the market is not moving in a what, in a straightforward way. So the range keep giving you series of higher high and higher low, series of lower high and lower low. The range will give you high and low, high and low. You can't tell for the range. Now for the range, the honest truth about the range is that you can't tell if the beginning is a what, a low or a high. But now with what I'm saying now, let's say this beginning is a what, is a high. Now why am I saying it's a high? Because okay, sorry, the beginning is a low. Now why am I choosing low? I will let you know why I'm choosing low. Now this is the beginning. Sorry, it's not a low, it's a high. Let me tell you why I'm choosing high. This is the beginning. This is the beginning is a what, is a H. Call it a high. Now I'm choosing high because after this place, market went up. After the market was created, the next thing that happened was market went up. So that's the main reason why I'm choosing what. Our trade is still moving. So that's the same reason. That's the main reason why I'm choosing as a what, as a high. Then the next will be what? The next will be called a what, a higher high. So the next will be what, a higher high. Now this part now, you can see if you see this part now, this higher low is lower than this higher high, but it's not lower than the previous high. Anything that makes this part go lower than this now, automatically there's a what? There's a break of what? There's a change of what? Structure. That means the market has what? Changed structure from a what? From a bullish to a bearish. Now you can see that's what happened here. You can see this point now is lower than this previous what? High. You can see you can see market with the straight line. You can see this is the range. You can see now it's lower. Now it means what? This is what, a change of what? A change of character, a change of what? Market what? Structure. The market has changed structure from a what? From a uptrend to now a what? A downtrend. So hence here will be what? Here will be what? Here now it's no longer what? A higher what? High again. Here is a what? Higher low. But the market is what? The structure is what? Is very, very funny. As you can see, the structure is very, very what? Funny. Now, let me test. So here will be a what? Here will be what? A lower high. Let's call it a lower high. But you can see again what happened next again. Instead of the market to keep going down, the market went up. The market went up and what? And did a what? A break of structure again. A change of character to the upside again. You can see. So here we call what? Here we call what? A higher high. So most times the range is always what? Is always funny. Most times that's why if you are trying to understand or read a particular market structure and you're not getting it clear, all you have to do is what? Change your time frame. It's not a must that you must trade a particular pair. If you open, for example, as you can see on this pattern, you can see I have so many different types of pair. I have so many pairs here that I'm trading, that I'm watching. If I check a particular pair and I'm not understanding the current market structure, because the current market structure is not very clear to me, what will I do? I will ignore that word pair because I don't know the what direction of the market. That's what's happening here now. The current structure, market structure, I don't even understand what's happening here. It's not giving me a straightforward market structure. I cannot tell you that the market is bullish or bearish. That's why the market is in what? In a range. You can see it's going what? It's going up and it's coming down. Now, and also there's what we call internal what? Market structure. I will make you understand on the next topic. I'll make you understand internal market structure because that's what happened here. You can see this place here now. Everything you are seeing here is what? Internal what? Market structure. Now, why is it called an internal market structure? Why is it called internal market structure? That's because this high, this high and this one did not break above this and this. It did not do a change of structure. It did not do a what? Break of what? Structure. There was no change of structure and there was no break of structure. I get me. So yes, what in so you don't mark parts here. You don't mark here. You will leave it. It's what inner. You don't mark it. Even here, you don't still mark it. You see everything here, you won't mark it because there's no break of structure. Because before you label a higher high, it means it has broken structure. It has broke the previous higher high, the previous higher high, to give you a fresh new higher high. I don't know if you're understanding me. So before you label a new higher high, it has broke the previous higher high to give you a new higher high. I don't know if you're understanding me. Now let me show you this. I said buy gold just now. Let me show you. Look at it here. Let me show you. Let me show you why I say you should buy gold. Let me show you on the chart. Look at it. Okay, look at it now. Look at it. So as you can see, I map out this zone. I've mapped out this zone before the class starts. That was when I map out this zone. I map out this zone before the class starts. Wait, let me just before the class starts. That's why. So you can see how market did ranging, and what happened is market came to tap here. So after market did range, market came towards tap my zone. This was my entry zone. You can see after market tapped my zone, market went up. This was when I said buy. I said buy. This was at the initial stage. I said what? You can buy good. So I'm expecting market to go, but there's a what? There's a rejection here. There's a rejection here. That's why you are seeing this candlestick now pulling back because of the what? The rejection. Probably because I'm busy with class, I cannot be doing two things at the same time. So let me just close. I've made $54. So I've closed what? I've closed the trade. So sorry about that. I've closed the trade. Let me move on with teaching. So I was using which pair just now? I was using River. Yes, where's River? I was using River to analyze, right? Was it River? Was it River that I was using to analyze? That's what about analysis. Okay, good. It was River, yes. So this was it. Are you getting me? So this is the basic word market structure. So it's either the market is what on a bullish or on a what on a bearish. As you can see this zone now, look at let me show you. Let me show you why that zone and this zone cannot be labeled. Look at it. You can see here. See this was the high, the previous height. You can see. Then this was the previous what lower low, lower high. You can see. So price did not break any of this zone. If assuming price broke this zone, I would have labeled it higher high. And I wish price broke this zone, I would have labeled it lower low. Now, that's why we have multiple time frame. Now, for if you someone that if you see this kind of structure, do you know what will happen is you will now go to a lower time frame so you can read this internal range movements. You will now start reading it, you will now start mapping it again, higher high, higher low, lower low. Then here is as broken structure, you now name it to what a higher high. Then this place again is an internal range again. So that's how you keep what changing what time frame. So that's for what the bullish, the bearish, and the what and the range. I believe I've explained these three to you guys now. I believe you guys understand very well about bullish, bearish, and range. So next we'll be talking about the trading rules in taking trades, the trading rules. Now, in a bullish or a bearish market structure, market trend, what you always consider is what how to trade. Now, you cannot just see price moving in a bullish or in a bearish. You just say, price is moving in a bearish, price is moving in a bearish, price is going down, price is going down. Okay, now I want to short the market. No, 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 you're wrong. You're wrong. You cannot just see price going down, say you want to short the market, price going down. No, before you short every market, this is what you need to consider. You need to consider what a pullback. You always short market from its what pullback. Because if you don't short market from its pullback, you have given yourself a wrong timing of your what your entry. And what will happen next? You might either what get liquidated or hit a what stop loss. Now, let's say let's use this bullish for example. Now, see you see this bullish trend now, this bullish market trend now. You cannot enter this market from this point. From this point, you cannot enter from this point. From this point, you cannot enter the market from this point. Entering the market from this point is wrong. You know why? Because the market will what pull back, and when the market pull back, it will affect your psychology. You'll not be thinking, this market want to reverse. Does this market want to reverse, or what will happen? It will affect your psychology. So it's always advisable to enter your what a new market from its pullback. So you enter the market from this zone. This is when you enter the market for what for a long. I don't know if you're getting me. So for every bullish you enter from what from its pullback, the same thing applies to a what to a bearish too. So a bearish, so you don't enter the market from the what from this zone. It's wrong to enter the market from this zone because you see that the market is going there, you just enter. No, you wait for a pullback first. After this pullback, which is this pullback at this zone here, then it's fine for you to enter this trade from this zone. So that's how it is. So at every point in time, you need to understand, you need to ask yourself, this market is a bullish, this market is a bearish. When can I enter the market? Can I enter the market now, or I'm going to wait for a pullback? So it's always advisable for a trader to wait for a pullback before entering towards the market. So whenever you see a higher high, which means whenever you see a market going up, going up, going up, just know that market is what is bullish. And whenever you see a market going down, just know that market is what is bearish. Now let me show you a clear example on a live chart. A live chart. Now let me use Euro USD. I like using Euro USD for this example, Euro USD, because it has a very sweet market movement. Now, Euro USD. Let me use a 4 hours time frame. Good. Now Euro USD, good. You can see, let's start with this. You see this zone here. Everything you are seeing here is what market is what bullish. Market is what bullish. As you can see, market is what bullish. You can see what I did here. I labeled here what a brick of structure. I labeled here a brick of structure. Then you can see I labeled here change of character. So the market is what bullish. Then you see this zone. The market is what bearish. So if you want to label this zone, you label it. Look at a high, higher low, higher high. Let me a higher high, higher low, higher high, higher high, higher high, higher low, higher high. Are you seeing it? So you can see the market is what bullish. Then why this other part again? You start from here. Low, lower high, lower low, lower high, lower low, lower high. You can see this part now, the market is what bearish. So we have the bullish and we have the bearish here. Let me see if I can see the range here. I cannot see a range here, but I'll see a range on the 4 hours time frame. Let me show you a range on the 4 hours time frame, on the daily time frame. Sorry. On the daily time frame, this box here, this box here is called a range. Sorry, it's a range because you can see there was no break of structure towards the upside or towards the downside. It was just what moving towards a particular what range. You can see our price range from here, it went up, came down, it went up to that zone, came down, and went up to that same zone. So you cannot call this place that is bullish or is bearish. The market is moving in what? In a consolidation what? Zone. I don't know if you're getting me. So this was what? A range. Sorry, if you have any question to ask, please you can ask. Oh. I entertain question. If you have any question to ask, if I'm too fast, you can just draw my attention on the screen. That's why I always come back to the screen to check if there's any chat on the screen. So if I'm too fast, you can always what? Draw my attention so I can what? I can repeat myself and what? Clear any question you're asking. So now let's go straight into what? Into a break of structure. What is break of structure? A break of structure occurs when price break past its previous what? High or low, depending on the trend. If it's in an upward trend and price broke above the current height. Now there was a time that Bitcoin was 100,000. One Bitcoin was $100,000. That point, that $100,000 is the current what structure, is the current what height of BTC. Now, the moment price broke that structure to 101, immediately there's a break of structure there because there's a new what higher high. So that's simply called what a break of structure. Whenever price broke its previous what higher high, it's called a what a break of what structure. Same thing as a what break of structure in a downtrend. Now in a downtrend, if the current price of BTC is 90,000, the moment price will drop down to 89,900, there's a break of structure there because this is the current what low. So break of structure happens in an uptrend, break of structure happens in a what in a downtrend, but there's no break of structure in a range. So most times when you are trading, you use break of structure to what to confirm or to what to confirm. In fact, you use break of structure to confirm the current what trend. Now, if there's no break of structure, there's no new trend. If there's no break of structure, you cannot identify the trend if it's a what upward or what downtrend. Now, for an upward, you need a break of structure to identify that this market is still in what in an uptrend what movement. But once there's no break of structure, trust me, you can't identify that structure, that market, if the market is what uptrend or a downtrend. The same thing applies for a bearish market structure. Once there's no break of structure towards the downside, then the market you cannot identify the market as a downtrend. The market is identified as what as a ranging. So why do we need a break of structure? We need a break of structure what to confirm what the current what market what trend. Then also we have a what change of character. Change of character or change of what structure. Some people call it change of character, which is called CHOCH. Some people call it what a change of character. Sorry, let me show you. Look at the gold signal I asked everybody to take just now. You can see how it's moving well. It's moving well. It's moving very well. Please take profit, take profit, take profit. Just close the trade in profit. If you took this go signal, close profit. So close in profit, close in profit, close in profit so I can concentrate. So let me explain the what's it called? The chain of character for you guys now. The painful thing happened today. You know, I dropped this trade now on my Telegram channel. Do you know that this trade has hit stop loss, taking all my students out of the trade, and now the trade is going down after hitting stop loss. And I wanted to increase the stop loss to 38, so, but it has already passed our 50%. So, but we took three trades, and the other trades are going well. Ethereum, okay, I don't know. So close that trade now. So let me explain to you guys this river. Sorry, uh, change of character. Now, change of character. This is change of character. Look at change of character here. Now, I thought about break of structure. You see this place here, this zone here. This zone here is called the break of structure. This zone. There's a break of structure there. Look at it. Yeah. This is called break of structure. Break of structure. This is called break of structure. So in an uptrend movement, in an uptrend market movement, when price when price creates a new high, it's called a word break of structure. Now I want to use the same bullish. I want to use this bullish as an example to show you what change of what character. Let me show you change of character. Now this is change of character. Now after you see price going up this way, you now see price now. Price will come down. Price is supposed to reach here to go up again, but this will happen. Price will come down. So automatically here is called a what? A change of what? Character. CHOCH. Change of character or change of what? Market what? Structure. They are the same thing. I don't know if you're understanding me. So this is how price work. So price will do a series of what? Break of structure towards the upside or towards the downside. Then price will not change character towards the what? Opposite side. Because price cannot just keep going up. It must what? Change character to the downside. Because the price always wants to deceive you. It always wants you to think that it's going up or it's going down. So price will do a what? Change of character. So that's called what? A change of what? Character. So now I want to talk about time frame, market structure across multiple what? Time frame. Now let's talk about time frame. Let's talk about time frame. Sorry, I'm cleaning this. I'm cleaning this away. I'm cleaning this from the screen now. I'm cleaning this from the screen now. We're done with it. Okay, let me just go to a new page. Now let's talk about time frame. Now what is time frame? Now, as you can see on this part now, these are different time frames. You can see this 1 minute, this 3 minutes, this 5 minutes, this 15 minutes, 30 minutes, 1 hour, 4 hours, and what daily time frame. Now, time frame. What is time frame? Market moves generally in all what in all time frame. Market moves in all time frame. There's no particular time frame. You say market moves in 4 hours. No, market moves from the what from the lowest, which is the 1 seconds, down to the highest, which is what the yearly time frame. So market moves in all what time frame. Whatever movement market does, there's a record that was be taken for that time frame. So now you need time frame to analyze your what your trade. You need time frame to analyze your what your trade, to ask yourself, what am I seeing in the market and when am I going to what enter the market. So we have different types of time frame, but there are some major key time frame we want to work with, which is the what the 4 hours time frame, the 1 hour time frame, and the 15 minutes time frame. So this is basically what the different types of what time frame that we have. Now, if you are working in a 1 hour time frame, it's expected that you are using that 1 hour time frame to what to check the market what structure. You're using that 1 hour time frame to check the market what structure, to see what will happen. So most times when you do your market structure on the 1 hour time frame, you might not see your entry in that same 1 hour time frame. So all you have to do is to for you to what come to a lower time frame to what to see your entry. Now let me make it clear. Let me show you one example on that. There was a trade I took yesterday. Okay, no, sorry, day Wednesday. The trade was on gold. Let me show you. Let me show you something now. The trade is still here. The trade is still here. You look at it here. So this was analysis here. I did a video on this analysis. This trade was sent to me by someone. Someone sent me this trade yesterday, day Wednesday, and asked me to what to check and do what analysis on this trade. You can see the trade hit our take profit. This was when I entered the trade. I entered the trade from this zone, and the trade went down to what take profit. Now you can see, look at the zone I map at. There was no, I'm not seeing anything there. But do you know why I map out this zone? It was because I went straight to a what to a 5 minutes time frame. You can see on the 5 minutes time frame now, you can see the zone. This was what I marked. But initially on the 15 minutes time frame, you will not see it. So most times when trading, you might not see what you are looking for on a bigger time frame. Now you need to go down to a smaller time frame to see what you're looking for. So that's how it is. So that's why you see we have a different what time frame. So your time frame, what you are looking for might not be what I'm looking for. What I'm looking for, I might see it in a 5 minutes time frame. But what you're looking for, you might not see it in that same 5 minutes time frame. So you need to check a 1 minute time frame or a bigger time frame to see what you're looking for. So there's no particular time frame that you say, so this is the correct time frame. No, all time frames are correct. Just depends on what you're looking for. So what are the common mistakes people make when trading? So you see people say, but Bitcoin they move now. I bought Bitcoin and now I've lost all my money. Now what are those common mistakes people make? The common mistake people make in trading is because what? They are trading against the trend. When you are trading against the trend, you blow your account. You blow your what account. Now, sometimes you say, the market has 1 2 months, market I want to start going down. Why? Why do you think so? Are you doing of the market? Are you doing of the market? If you are doing that, you will blow your account. I don't know if you're getting me. And another thing again, when you are using too much, there's what we call indicators. Indicators is like there are tools we use in what identifying the market structure. Now, all these tools are drawn by man, by people like us. They analyze and join this. There was strategy. They just map it there for it to be easier for you. So sometimes when you are using too many indicators, you are making it complicated. You are making everything complicated. When your analysis is too much, it will be what complicated. So most times it's just easy for you, just better for you to what just do a very short and simple, clear analysis. When the analysis is too much, you end up what losing your money. I don't know if you are getting me. So that's it. So there are different rules in trading market in market structure. One of the major rules is what? Do not trade against the market trend. Don't predict. Don't assume. Don't say the market has been going up. I think the market. No, there's no time for assumption. This is a business. It's not state whereby you start at, because you see one wrong decision might end you in frustration. One wrong decision you will make might just what end you in what in frustration. So most times before you take any trade, always make sure that you understand the market structure. Always make sure you understand the market structure, the market trend. One clear market structure is better than 50 uncleared market structure. Now, what do I mean? Now, if you analyze a particular coin and you understand the structure, you understand everything about that market, you can explain and say, okay, this coin has been moving in the uptrend structure, uptrend. I'm going to take a long. It's better than you analyzing 50 different ones that you don't even know if it's an uptrend or a downtrend. I don't know if I get to me. So it's 11:30 already. So here brings us to the end of the class. So I believe with what I've taught today, you've understood market structure, the types of market structure, the uptrend, the downtrend, and the ranging. You've understood break of structure and you've understood change of character. What is break of structure? Break of structure it's just the word a confirmation to let you know the word market is still what in that word previous word trend. What is what change of character? Change of character is what it's just to let you know that the market has what change what a trend. Market is no longer bullish. Market is now what bearish. Then what is ranging? Ranging means the market does not have a definite what direction. It's moving in what in a long what horizontal what line. I don't know if you're getting me. So these are what the basic things about what market what structure. So if you have any questions to ask about market structure, the chat is open. If you have any question to ask, I will leave you to ask questions. So think of a question to ask. So let me explain. So I'm with you guys. So if you have any question to ask, you can ask any question concerning the market structure. If you don't have, we'll call it a day. Today is Friday. Today is Friday. Should we host the class tomorrow? Tomorrow is Saturday. Should we host the class tomorrow? Tomorrow Saturday. Tomorrow Saturday. Okay. We'll be holding a class tomorrow. We'll be holding a class tomorrow. Because today I was not really what's it called? I was up and down today. The network, everything was just going up and down today. So we'll host the class tomorrow. We'll host the class tomorrow so we can revisit what we just discussed today. And for those of you that came online and went offline, so we can still what teach them. But that aside, this video will still be on the what on YouTube, so you can still revisit this video to watch and refresh your memory on things you don't really understand. So in the absence of no question, I'll call it a day. Tomorrow by 10 a.m. Tomorrow is Saturday. Sorry, let's make it on Tuesday, please. Please let's make it on Tuesday. So on Tuesday by 10 a.m. We'll be holding a class on Tuesday. So on Tuesday, 10 a.m., we'll be holding our next class. Trust me, on Tuesday, I'll be 100% much active. There will be no network issue, there will be no up and down movement. I will just be here and what and make you guys understand. I'm sorry for the miscommunication today, but I'll try to make sure I do my best on Tuesday. On Tuesday, 10 a.m., our next class on Tuesday, 10 a.m. Thank you very much to everyone that participates today, and I'll say good day. Take care of yourself. Bye.